Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hello chart friends, we've got a thunderstorm rolling through, so it's a bit darker than normal, but we're going to be looking at a couple clues that I'm looking for to ensure that I'm not going to become complacent as a bull. Yes, the bulls have the trend. Yes, bullish is the direction to be looking in general, but we're reaching a point. Last time we got extremely complacent at the high of the COVID bounce, we dumped really hard and really fast. I'm going to be watching for something similar to this beginning to shape up. It was an 8% drop. Maybe this one will be a 4% drop. Maybe it'll be a 20% drop. I have no idea. All I know is that we reach a point where we see the VIX in that channel, which we'll look at again. I've highlighted the last couple of videos. And we see a number of things. We see our video views. Our S&P 500 video views with the chart guys were the highest during the COVID dump and the maximum fear. And now since then, or at least since this last dump, we've seen the views slowly fade away. And that's a normal pattern because, again, people lose interest. They don't need to check in every day if the market is just slow and steady marching up. We see it in every aspect of our analytics, whether it's membership, whether it's people signing up for free courses, whatever it is, when there is fear, there is a spike in that activity. And that's why you see news organizations pumping fear and headlines sensationalized. You know, as a YouTube creator, what I'm supposed to be doing right now is putting out a video with the headline, "Can gold hit 3,000? Is the S&P 500 about to drop 20%? A sensationalized headline to ensure that I get some more clicks, because without that, again, the market becomes complacent, our viewers become complacent, and they say, I don't need to check in today, not much has changed. So it's up to me as the YouTube creator to grab their attention with a BS headline. I don't like doing that, so I'm not going to. But the point of that rant was, as we see those views drop off, that generally leads to a spike in volatility. Just like the slow fade in the VIX leads to a spike for the bulls in the volatility index. So we could keep going up for another week or two. Again, I don't know when and I don't know how significant, but I know how these periods of complacency are most likely to end. And it's fast and hard to the downside, just like here. This downside move only lasted really 2 days. And that was it. But it was significant. So what do I do? Am I going to be looking bearish every day? No. I can say to myself, if then scenario, keep it simple. If the next time we see all three of our major sectors hit a low of the day at the same time, I enter a bearish position, I set a clear stop loss nearby, and I give myself the opportunity to potentially benefit from a fast, hard drop. So I can give myself the setup. If I see that criteria, then I make a bearish entry and look for follow through for the potential of a fast, hard drop. If we don't see that, if I start the morning and I'm looking at our sectors and saying, okay, tech's pulling back, but the financial sector's at the high of the day, I'm not going to be looking for a market-wide drop. So it could be headline related. It could come out of nowhere. Who knows? But I just know that we need to be watching for that to happen. And you can go back even pre-COVID. We reach periods of complacency at all-time highs. Next thing you know, fast, hard drop. Even if it's only 3%, it's fast and it's hard. And it seemingly comes out of nowhere. So that's where I stand. I'm well aware to be watching out for that. Other than that, we got a gap fill to be watching at 332.58 and then the all-time high of 339.08. Keeping in mind that we have adjusted for the dividend here. So really, we're even closer. If the dividend were not a factor, we'd be on the verge of the all-time high in about 1%. But we're watching 339.08, and we know anything above 319.25 is a daily high or low, and we know the bulls have complete control. IWM is up at the high of the COVID move, 153.39 breaking. That's a great sign because, again, if I'm a broader market bull, the tech sector has done the brunt of the work. I now want to see the financial sector pick up the slack, and I want to see these smaller companies pick up the slack as well to see the laggard rotation going on. Next resistance level, 154.20. And anything above 144.67 is a daily high or low. QQQ, blue sky breakout continues. So the slow and steady march onward, confirming the weekly bull flag with a lack of resistance nearby and tons of space for a daily higher low. The healthcare sector needs to see a bull break of 106.97, 107.31, and then the all-time high is right there. We formed a daily higher low now at 105.49. Bulls just need a bit more follow-through. Not a whole lot has gone on in the healthcare sector the last couple days. There's been shifting around between the financial sector and the tech sector that's been a little bit more notable, while the healthcare sector, again, hasn't done a whole lot. 3 days ago, we closed at 106.62, close at 106.15, 106.64. You get the idea. Not much has changed the last 3 days. Financial sector, resistant zone incoming. So we know the resistance zone is 2440s, and here we are approaching those levels again. If the bulls can clear 2450, we are then looking at 2461, 2512, and a lack of resistance. So clearing 2450 is going to be a requirement, in my opinion, for the S&P 500 to be looking at the all-time high. We do need the financial sector bulls to contribute to that. And there's no red flags unless we see, for me, a bear break of 2371. It was a very notable day here on July 31st. I remember it seemed like the bears were on the brink of taking over for a fast, hard drop. And as soon as the financial sector held this support level, it was a game changer and a momentum shifter back to the bulls. So that level matters to me a lot, as does 2449. And we're closer to a resistance break than a support break. Biotech sector, key resistance rejection from 115.42 today, but we didn't get much bear follow through. We broke it by 9 pennies, but I consider that a double top. We would have to break the low of today tomorrow, 113.27, to see a clear rejection. And the bounce is significant enough that we will be watching for a daily higher low compared to 107.69 once we do top out on this bounce. Semiconductors keeping up their strength. New all-time high, a little bit toppy at the end of the day. Higher low every day the last 7 days, 6 days. And if we break that pattern, we'll look for a new daily higher low compared to 161.33. So no major red flags, just a little bit of bull exhaustion perhaps. The VIX. So there's that channel. Again, 2 weeks. We could easily stay in this channel for another 2 weeks. I don't know when the break is going to occur. I just know that these channels break hard and fast. So I need to be watching for it. And I need to ensure that I am not becoming complacent and not putting stop losses on bullish positions, because that's when we get into trouble. Gold. Keeping the bulls in complete control. Nice follow through. Slow and steady. 4-hour uptrend on the current pullback. And again, tons of space for a daily higher low. Silver hit a higher high as well. Metal bulls still have complete control. Today was a day where I woke up and I saw stocks higher, oil higher, natural gas higher, gold, silver, Bitcoin, everything is higher. All assets doing well. As the dollar continues to see weakness, the dollar came back down, is trying to negate a daily bear flag. Have to hold 92.55 to do so. It is a double bottom. Have to break 94 for a daily trend change off of that double bottom. Much closer to a support break than a resistance break. And the level for me is 88.25. We have been in a 5-year range here between 88.25 and 103.82. If we break 88.25, hitting 5-year lows on the dollar will absolutely be notable to me. And from there, probably zoom out to the yearly chart. That's going to be key. 88.25. The midway point of that 5-year range is about 95. So if the bulls are able to shift momentum soon, just like that, we're going to be right back in the middle of that range. But there is still bear momentum on the dollar. Let's see XAU, XAG. Actually, we'll go miners first, then we'll look at XAU, XAG. The miners are a bit timid in the sense that any weakness in the metals that we've seen recently, we get a pretty hard, fast drop on those miners. Look at this hourly pullback on the miners today. Just big pullback. And at that same point in time, again, this is the non-leveraged GDX, we pulled back almost 4%. And during that point in time, the gold pullback, again, no major red flags. We pulled back 1.3%, and the S&P 500 was not pulling back. So it seems to me like the miners are just a little bit more timid. They're saying, oh, is this the top of the metals? I want to race to the exit. And then the sign is all clear. No, it's not our top on the metals just yet. But just noticing a little bit of jumpy action for these bull miners. Anything above 40.96 is a daily high or low. And we would have to see an hourly lower high and lower low into tomorrow for daily consolidation to be underway. So XAU, XAG, who's stronger, silver or gold? This is showing us that silver is regaining that strength against gold. We have the daily oversold bounce. We did not change the daily trend. And we are still seeing the silver bulls favored. And we know the monthly time frame is still looking for a higher low. And I take that back. We already broke support. Haven't looked at this chart in a while. So let's go bigger picture. Let's go 6 month. Next major level is 64.05. Big pullback as silver bulls have been raging the last couple months. Oil did break bullish, but an upper wick of profit taking on the earnings, not the earnings, the inventory report, looking for a 4-hour higher low to form on this consolidation. And when we lose the 4-hour uptrend, we'll call anything above 38.72 a daily higher low as well. That wick is interesting though, because again, we've been watching this resistance and it is still standing. We were watching the rising wedge. We broke bearish out of it. It lasted 1 day, quick recovery, but we are still rejecting from this uptrend resistance line. Worth keeping it on the chart. And natural gas, a bit of follow through. Bulls keeping their complete control. 4-hour uptrend. Trying to set another higher low on the 4-hour above $2. Resistance, lots of tops at 220. But the bulls strong and plenty of space on the daily time frame. So that is where we stand overall. Bulls are fine. SPY volume and SPY range pretty non-existent today. Got to find those individual names. You know, I was trading SPY and its leveraged ETFs. That was all I was focused on the way down and the initial leg up. And since then, the play has been to play individual names. Play the individual weak names bearish and play the individual strong names bullish. And there has not been nearly as much opportunity trading the leveraged ETFs based on these S&P 500 or QQQ as there was earlier. You can see just the ranges on these daily candles significantly shrinking versus what they were. So don't get complacent. Have a game plan for everything. What are you going to do if we suddenly drop 4% in a day? Again, I don't know when, but it's something I'm keeping an eye out for. And next time all 3 of our major sectors hit a low of the day at the same time, I will make a bearish entry. I will place a stop on that bearish entry to protect myself, but I will give myself the possibility of a solid entry for a solid bear pullback. But for now, bulls keep their complete control, and we'll see how long that lasts. Have a good rest of your day, and we'll see you tomorrow. More New Hampshire White Mountains.